Greetings, fellow traders, and welcome to this presentation on support and resistance trading. My name is Jason Gospodarek, and I'm going to go through what I think is a great summary of support and resistance and what it can mean to your trading. Support and resistance has been around for a long time, and trading via support and resistance has also been around just as long. What I'm going to cover in this presentation is a little history about support and resistance and what it means, show you some examples, and then show you some ways you can use it into your own trading. Look, it's great to be able to learn things and learn about Forex trading and learn how to make money in the markets, but it's even better when you can apply new techniques and have better analysis of the charts. What I've found in my years as a trader is that a lot of people understand support and resistance, but they don't understand the intricacies within it and how important it can be to being successful as a long-term, consistent, and profitable trader. So let's get started. Support and resistance defined. The first thing we have to cover is what is support and resistance. Support is defined as the level on a trading chart that acts as a barrier or a floor in price. It is an area that price has had difficulty falling below or moving lower than in the past. Resistance, on the other hand, is the opposite of support. Resistance is a level on a trading chart that acts as a barrier or ceiling in the price. It is an area that price has had difficulty in rising above or breaking out higher than in the past. I can't explain how important support and resistance is to technical analysis and technical trading. If I could reach right into this camera and pull you in here with me, we could have a coffee and talk about all the different details and why it's so important and how I use it to trade my own accounts. First, we need a few examples. This is an example of support on the Australian US dollar one-day time frame. You can see here that the support area does not have to be a line. It can actually be a zone that proves to be support over time. So although this is not a super clean exact line, it's still very important as far as support is concerned. Next, we'll look at an area of resistance. You can see here this gray box is the resistance zone. Some might call this a triple top, some might call this a head and shoulders, but either way, this gray box is an area of resistance. So again, resistance does not have to be a solid exact price point or a line on your chart. It's okay to use it as a zone, as the market is always moving, and sometimes we don't get the exact prices to hit. So on this example, this is the US dollar Japanese yen on the 30-minute time frame. I wanted to show you a few examples of resistance becoming support. You can see by the blue arrow here on the left that we have an area of resistance in price. And this area here, where the second blue area came in, is that same area of resistance that has now become support. Also up at the top with the red highlighted arrow, you can see another area of resistance that has also become support into the future. So knowing that this happens, you can utilize these areas for not only placing stops and profit levels, but also to make your trading better as far as entries go as well. We can also look for confluence of signals. So including support and resistance, we can use that as part of our trend line trading strategy. Here, where the X's are coming in, you can see our support and resistance areas also following the trend line. So let's talk a little bit more about support and resistance trading in general. First of all, we always want to make sure and look left on the chart and take a top-down approach. So we want to start with the higher time frames going down to the current time frame where we want to place our trade. Looking left means we want to look back in history on the chart to see if there's any swing highs or swing lows, any other support and resistance levels that we might want to make a note of. The longer the time frame, the stronger the level. So what this means is a support level on a daily time frame is much more important than a support level on a 5-minute time frame. So you can use this in any top-down approach. The longer time frame gives the more strength to the level of support or resistance. The more often price is repelled by these levels, the stronger the level. And the levels can therefore become a self-fulfilling prophecy with traders. Look, here's the way it works. If you have a level on a daily time frame that becomes an area of, let's say, support moving downwards, if this is on a longer term chart as well as the daily, say it's on the weekly or monthly, it becomes even more important. If it's bounced off of that lower level 2 or 3 or 4 times, it's even more important to the market. And the more that the traders and the big banks and the hedge fund managers and the big money see these levels, the more they become important and become a self-fulfilling prophecy of support. Each one of these steps, and a few more, can be used to determine how strong a support or resistance level is. So part of being a more refined, well-rounded trader is not just drawing lines in the chart, because that's easy to do. It's looking at this top-down approach, seeing how much the line has been respected, and also looking at these levels to see if there's confluence with other indicators or other patterns on the chart. Like I mentioned earlier, these are often zones of support or resistance. They're not really exact levels all the time. Look, it's always nice to look back and have a support or resistance level hit right to the pip, but that doesn't happen all that often. So we have to give the market a little bit of cushion. We call it the organic breath of the market. There's always going to be these little whims and rises as the market moves, and we have to be prepared for that. Don't always expect things to hit exact. With that being said, you have to decide if you want to be a more aggressive trader or a more conservative trader. An aggressive trader would look to sell at a level of resistance before the price even gets there, where a more conservative trader might look to wait until that level of resistance is hit and then see the continuation downwards before putting a sell order. There's many ways to trade support and resistance, but these are just a few things to think about. Next, we're going to talk about how support and resistance can have multiple applications in Forex trading. Here's the first one. With support and resistance, you can manage your risk within a strategy, such as stops and profits. Support and resistance can be used in many different strategies, and it is currently all around the world. It can help you to set your stop losses and also your take profit or profit levels. Support and resistance can also help you to grade the overall market conditions, such as creating higher highs, higher lows, lower highs, or lower lows. One simple glance at a longer-term chart with the support and resistance levels drawn in can give us a good indicator if the overall market for that currency pair or commodity is on the uptrend, or if it's bullish, or if it's going down or bearish. Another thing that support and resistance levels can do is help to create great entry and exit levels for trades. Next, I'm going to show you a simple example of support and resistance. You can see by this diagram that a support level is a level on the chart, or a certain price, that price bounces off of. Some traders will choose to buy or enter into the market, as this little diagram shows, and place their stop beneath the support level. On the other hand, we have trendline resistance or resistance. You can see here that the stop loss is placed above the resistance level, and the entry order to sell would be placed below that. So we have support and resistance as a line, and we also have support and resistance as a trend line. Next, we're going to cover some key levels to watch with support and resistance trading. Some of the key levels that we always want to watch and monitor with support and resistance are swing highs and swing lows, rounded numbers such as 1.0000, psychological levels. Psychological levels could be the round number like a 1.000 or a 50 pip level, or a psychological level on the dollar index, for example, of 100.00, those types of things. We also want to watch for Fibonacci levels. Fibonacci retracements and projections can be key areas to watch when you're trading with support and resistance. And of course, we have pivot points. We have monthly, daily, weekly pivot points. We'll talk more about those in the future. Even moving averages. Moving averages can be great support and resistance examples, and I'm going to give you a few examples of those right now. Here's a great example of moving average support on the Australian US dollar daily time frame. Here we have the 30 simple moving average as support, and you can see where each arrow is placed, there is support on this 30 SMA line. So if you were simply trying to trade this pair on the daily time frame, looking in hindsight is obviously easier, but you could simply be buying on the pullback each time we pull back to the 30 SMA. Next, we have an example of moving average resistance, again on the Australian US dollar, this time the 1 hour time frame. Here you can see the 20 SMA as resistance. Each little arrow here shows the resistance that the 20 SMA had on the price action. Trading with moving averages for resistance and support can be one of the most exciting ways to utilize support and resistance as a whole, because these can sometimes go on for many candlesticks. Next is an example of selling on resistance. This is a chart of crude oil on the 1-day time frame, and you can see here on the first arrow we had a price of roughly $51.73 per barrel, and we approached that same price again in the future. A simple resistance play would be to sell when this price reaches the area of resistance to the left. If you were able to sell crude oil when it reached this resistance level, you could have potentially played a short or sell order on crude oil all the way down to the next support level. Now again, hindsight is 20/20, and things don't always work this well. But this is a really good example of how strong resistance levels can be in the market. And again, the longer term time frame, such as a nice daily chart here, can show very strong levels of resistance and of support. If you look to the right, you can also see this same level was respected once again and pushed down again for the third time, almost the fourth time, and before finally breaking up and breaking this resistance level. Here's a great example on the pound yen 4-hour time frame about how to trade trendline support. Each time we see one of these little arrows, we are at or near the trend line. If you look all the way down to the left, you can see the little wick here at the beginning of the trend line, and we continue to bounce on that level 1, 2, 3, 4, 5, 6, 7, 8, 9 times. We have a slight break here, but again, if you have your stop anywhere decent below that, you should be okay. And then we finally have a break of the trend line here. Now again, this is a 4-hour time frame, so these moves are quite significant on the pound yen. Plenty of chance to profit on a simple trend continuation strategy. And again, trend continuation strategies to the north or up would be buying the pullbacks, and the trend continuation selling strategy would be selling the pullbacks on the downward move. I have another example here that's really, I think, just a beautiful example of resistance becoming support on the dollar yen. This is a 1-hour time frame. This actually happened fairly recently. And I put a red box around the area of interest, which is around 114.77 on the price ticker here to the right. If you can't quite make it out, it's 114.77. And if you look left at the first blue arrow or teal arrow here, you can see an area of resistance starting to form. The second blue arrow, the price actually hit that exact line within a pip or two. And then we move forward and we break straight through that area, and price comes right back down to where it was once resistance. If we look left, now becomes support. We rise up and become support again, very strong support level, almost exactly to the pip, before moving up to bust out and break out to the north for these new highs. So this is a very classic, probably one of the best examples of resistance becoming support. Very clean, almost exact. Again, it doesn't always happen this way. I prefer to use support and resistance zones instead of just the lines, but you get an idea of how accurate it can be. So before I idle back on this talk, I want to give you some of the steps in my analysis. You may have seen this before, so I'm going to go through quickly. First, what I do is form my trade idea. Then I analyze that idea, decide on what to do, calculate the risk, and then place the trade. And here's some of the steps that I take. First, we check for news events. Then we check for the pair's overall bias. Number 3, we do top-down analysis going from monthly, weekly, daily, 4-hour, etc. Number 4, we look at correlating pairs. Number 5, we look left for clues, because there's a lot of clues that the market leaves for us if we keep looking to the left before we trade. And then number 6, I like to check the structure, looking for support resistance as we're covering here, patterns, trend lines, and key levels. Thanks for watching this talk on support and resistance. There is so much more to come. Again, my name is Jason Gospodarek. I thank you for your time today, and don't be afraid to contact me if you have any questions or any input on this presentation, or if you have recommendations for future presentations to come out in the near future. Thanks a lot. Make it a great day, and happy trading.